All right, Ken Orange Day Trader back with you with another video, just talking about the lazy trader method, one trade account flip. So for this series, I'm only going to find the one of the best trades or the best trade for the week and how a flip would have looked. Right. So with the small account to a big amount. Okay. So here we go. The best trade this week was in the Aussie and the New Zealand. I just picked New Zealand because Aussie did have news, and I try to stay out of news, but at the same time, this is how it worked out. So first off, I use the leverage requirements to know, okay, depending on my account size, how much money do I need in order to take multiple positions? Okay, because scaling it, if you want to grow an account quickly, you typically need to scale into the position. Okay, so in this case, Aussie, obviously, with it being the New Zealand pair, New Zealand is actually the most expensive pair there is to trade, at least with my broker. I don't know if it's different on various brokers, but to earn $1 per pip, you need to have at least $42 in your account. Okay, that's how it works out. Swiss is the cheapest. New Zealand is the most expensive, so it is what it is. So hypothetically speaking, let's say if we had a $150 account, we could realistically take. I know this says four. It does round up, but it's about three positions if you're using all your margin to earn $1 per pip. So you could make about $3 per pip across all the positions, more or less scaling in three times. So that's 4, 8, 12. Okay. So, about over 120, about $130 worth of margin you'd be using for one trade for either one of the New Zealand pairs. So in this case, I'm going to do pound New Zealand. And so we'll do Tuesday, which was right here. And I'm going to take a look at the three best entries that could be realistically taken for this day to see what we may have wound up with. I wish I took this trade, but I did not. So let's take a look. So we'll go down to the 5-minute chart. We'll see if there's any fair value gaps that we could have based the trade off of. And let's see here. All right, so I always like to look at the first fair value gap that does get created in my bias or in my direction. So that was the one right here. So you could have taken a trade. That's at 6 o'clock. I'm not really keen on that. I'm gonna be honest with you because the spread is still would have been big. So really, it would have been right here at 9:40. So we'll do our first entry there. And let's see, for a stop loss, we would have put it, or it's fine to put it a little bit above it. So we'll say about 16. All right, so we would have been risking about $16 on that because it's 16, $1 per pip, we'll just say. That would have been our first entry. All right, there. And then we could have taken another entry right here. And another entry, just as it goes into profit is what I like to see. So we'll just say like right here on this red close right there. And it has to do this so that you can train yourself to know, okay, it is possible. How would it look though? How does price need to move in order for me to, take a good trade on a daily basis? So there we go. And we'll just do 150. 150 is fine. So there you go. All right. So, okay. So this first trade would have been worth 150. Our account balance was already 150. Next trade would have been worth, that $1 pip is easy enough to figure out. About we'll say 140. And then this last trade would have been worth, let's say 130. Okay, so that's $570. So this one trade right here would have been worth $570. So I always like to look at the risk to reward, or at least the return on the investment. So if I started an account with 150 and grew it to 570, what's the return on investment? That'd be 280% return, right? Now, are you going to get 280% return every single day, every single time you trade? No. You would be a billionaire in very short order, right? Okay, so, but this is just one example of one trade through scaling in, right? As how you could possibly get that. Will you get this every single week? No. Will you get this every single month? No. I don't want to set false expectations here, okay? All I'm saying though is that you took, in this one example here, if you had taken this trade with 150 bucks and you could have got 570 out of it, or you need to grow your account up to 570, would have been a good payday. That's all. And then you could have stopped for the rest of the week. All right. Take a withdrawal, start over, do it again. Okay. But the key to doing this is number one, trading the daily range. Number two, not over leveraging. And number three, knowing where to get out, cutting the losses and keeping them small anytime price does something that you don't like. Okay. Because the main method of this was this fair value gap holding, this gap holding, and then by this point you were just off to the races, and that was it, right? Okay, and the price did drop. Well, it dropped a little further, but and not being greedy as well. 150, I mean, that's more than enough. Okay, 280% in one day, that's good. Okay, but don't. I'm not trying to get 1,000% in one day. That's just kind of unrealistic. Okay, so anyway, but that would have been it. So that would have been 150 to 570, taking that one trade. You don't have to trade 1,000 times a day. You really don't. You take one good daily range a week, two max. You're doing okay. All right. So, but that's it. So that's the trade of the week. Hope you got something out of that. That's the whole math of it as well. And hope you have a great rest of your day. Take care. Thanks for watching.